It's Soleil, and this is episode 377 of the Orange Pill Investor. And today I want to talk about MSTY a bit. Been getting tagged into some conversations about it and got linked into a really good video of whatever he was, the chief investment officer, what I forget what the hell his title is, um, explaining their overall philosophy on their yield max funds. And then also, it's this one here. And also the the idea of what return of capital is. I hate when the same like abbreviation gets used for multiple things, but a lot of times when I'm discussing covered calls, I use ROC as return on capital. Like if I sell a cash secured put for you know 30 grand on strategy and I collect, oops, wrong direction. If I collect $1,000, that's like a little over 3% return. Taking the premium collected divided by the collateral that you got to put up, but they're discussing ROC as return of capital, which if you under normal circumstances, that would be a bad thing because if you were investing in something, oh hell, let's actually just talk about it. Um, let's talk about it with the new Strife offering. So Strife is promising 10% returns. And if they just didn't have the money and they had to, reduce the overall portfolio size in order to meet that dividend, then I think that would be return of capital. But the way that Misty is doing it is they're basically paying you off your unrealized gains. And as soon as I found that out, I was like, oh, well, that's what I do. That's the same shit that I do. Because if if I sell this 10% out of the money, so I sell the 330 strike for next Friday, week from tomorrow. The interesting part about selling an option is that the unrealized gain is guaranteed to be realized as long as you just sit and wait. Because since this is out of the money, 100% of this $338 is extrinsic value. And at 3:59 p.m. on Friday of expiration, March 28th, extrinsic value will be zero. It'll be like a penny left. And you would basically pay uh, if it's still out of the money, you probably have to pay $1 to close that contract. And so what since that money is actually guaranteed profit. I know there's no guarantees in life, but this is no different than going to the grocery store and getting my ribeye off the out of the refrigerated section and them saying, "Okay, that'll be 10, $20 or whatever," right? That transaction is complete. I pay them the money, I get to take the product. And that's the same thing when you sell an option. Just like if you sell your 100 shares, you get the 30 grand. Now they could go bankrupt or something and default on it. But when you sell something, you are immediately um, within your rights to spend the money, right? So if I sell this, my buying power increases by $338. Now, I'm my buying power might go down by $33,000 if I sold the 330 strike put, right? I'm gonna have to put 333 grand up as collateral, but my buying power will go back up again $338, and I can take that $338 and I can do whatever the hell I want with it. I can go up here and go to my account and click withdraw, and I can withdraw the $338. And the reason is because extrinsic value must go to 0. So if I sit on my hands and do nothing, then all $338 will drain out of this option price. Now, if the price goes up to $350, then the $338 will drain out of this option price. But then the difference between 330 and 350, so 2 grand, $2,000 worth of intrinsic value will have, and you can say, drained into this option price. Um, but that's a completely separate line item in the spreadsheet. And it has to be kind of considered separately, right? Because if I own 100 shares, I bought the 100 shares for $300 a share. I'm going to end up having to sell them for 330. I made 3 grand. Um, and it's not that I lost to the $2,000 between 330 and 350. It's that I didn't profit off of that. So the only way that I would end up with a loss on that position is if I decided to retain my shares and roll it out. And in that case, um, I'd have to pay for that roll. And it's interesting because there's a YouTube commenter that I argued back and forth with. It's probably my longest conversation on YouTube comments, but he was not happy with the way that I was managing the profits here. So I got 1,000 shares. If I wanted to sell a covered call on one of those 100 shares, I can go out here. Let's do something a little farther out. So 40 days, maybe I go out here and sell the 375 or the 400, whatever, just meaningless. And I collect this, well, mid price is like $800. What I would do is immediately, since I'm still bullish on the stock, I would immediately go out here and say, okay, can I spend that $700 on a long call? And he didn't like that at all because the $800 that I was collecting is an unrealized gain. Now, I just explained how it's a guaranteed gain, but this definitely rubbed him the wrong way. And maybe that's the same kind of philosophy that other people are having and kind of confusing this as the traditional return of capital. But this doesn't bother me a bit. This is MSTY apparently is literally doing what I do, right? So if they sell this covered call, collect $800, they're just dumping that $800 back as the dividend to the shareholders. And I actually have no problem with that whatsoever. He gave a couple of examples that were pretty illuminating. So I think it's at like the 24-minute mark. So definitely check that out. I actually listened to the whole video. I went back and listened to the whole thing. It was pretty good. But let's take an example of just 100 shares, right? If I go out to the market and I spend $30,400 on 100 shares of strategy, I turn around and I sell the 400 strike. I collect this 800 bucks. There are three things that can happen to the price. It will either go down, trade sideways, or go up. That's the only thing that it can do. Let's do horizontal first. In that scenario, your shares are worth exactly what they were when you started. So that's a wash. And then over some period of time, let's just say 2 weeks passes. So that's going to take us from the 41 days to expiration to the 26 days to expiration. Now the 400 strike is only worth 400 bucks. So now if I close that position, my unrealized gain of the 790 will turn into a realized gain of about 400 bucks. Or I collect that $400 realized gain, or technically I could do nothing, right? And then I would have, oh God. So I could realize that gain if I close it, or I could just let it run and wait for more of that unrealized gain to be realized. Or I could close it and roll it back out to 45 days again. I would have collected the $400 of realized gain and then collected another $800 of unrealized gain out to 45 days again. And that's generally what an option seller is doing. They're just letting this $27 a day of theta just drain into the account. So if the price goes up and it goes above $400 a share, so I guess there's really 5 scenarios. It could go up but stay under the strike, or it could go up and breach the strike. But really, it going up and staying under 400 is no different than it trading sideways. It just takes longer for you to realize this gain. So we'll just call that we'll call going up and staying under the strike, we'll call that like 1A of the trading sideways scenario. But if it goes up and breaches your strike, now your $30,000 $30,000 MSTR shares is worth 40,000, and you have realized 100% of that gain. And that's why a covered call strategy is not a bearish strategy, it's a limited bullish strategy. So you have increased the size of your portfolio by 10 grand. You also get to keep this $800 that you collected in the first place. So you're actually up $10,800. And then if the price of strategy goes to 50,000, now you've got now you got some splaining to do. Now you've got some decisions to make. And if you're MSTY, what they're going to do is return you 100% of this covered call premium, even though they're kind of on the hook for the loss from from 400 a share to 500 a share, which is eh, which overall is fine because the overall portfolio actually went up in value from, the 30 grand to the 40 grand. And the thing is, it's on paper, and as far as the IRS is concerned, it all ends up kind of bumfugled because if you roll that and you pay the 10 grand to roll your your 400 strikes to 500 another month down the road, you still own the shares, so you don't have a realized gain from 30,000 to 40,000, but it's still there. Like it still exists, even though it cost you 10 grand to roll those options. And the reverse is true if the price drops from 300 a share. So now we're talking third scenario. If the price goes down and so your 30,000, if it drops to 200 a share, your $30,000 portfolio has dropped to $20,000. So, your overall portfolio is fucking hemorrhaging, which sucks. But if you don't sell those shares at a loss, then it's an unrealized loss. And when they sell their covered calls against a $20,000 position, the percent returns that they're going to get against that is going to be, 33% less than they would have otherwise been if the price was still at 30 grand. But since they're not selling those shares at a loss, that's an unrealized loss, and they can still pay you out the $800 premium that they collected. So all of the concerns that I really had around MSTY have kind of been answered and settled here. Um, Even the question about NAV erosion, because that's the third scenario that I just discussed, where they're forming these. So they're actually based on certain laws with the ETFs. Apparently, and I had heard this before when I listened to one of their Yield Max videos. I really want it was like 18F or something, but it sounds like with these ETFs, they're actually not allowed to own 100% strategy. They can't just take $10 million, buy all shares, and then just start trading covered calls off of it, which would make the most frickin' sense. But of course, the government and the regulators are a bunch of fucking morons. Um, so it sounds like they can literally only use like 25% of the ETF because of these diversification rules to stack strategy with. So the MSTY fund is more like it's a maximum of like 25% strategy, but really it's 75 to 90% treasuries, which they're earning some small amount of yield on. So while all of my concerns about MSTY have kind of been answered as far as the return of capital and the NAV erosion, I still don't like the fact that they have to stack all of these treasuries. That would be like, you know, that would be like me having 100 grand to invest, and I'm going to let 90% sit in cash, earning a couple of percent interest, which I think Robinhood even does. They give you some interest on your cash balance. And then just trading, buying 100 shares of strategy with like, like a $150,000 account, buying 100 shares and just letting the other 90% sit in cash. It's kind of ridiculous. So that just makes me even all the more confident that any competent covered call seller should be able to beat MSTY over time. Um, but yeah, I mean, I really liked everything that the guy was talking about, and MSTY definitely has kind of stepped up in my estimation, really. So and actually about that, I am still a little bit confused. So the way that he was saying it is you the little tricks that they use to make their synthetic stock. So let's just go out here, right? If they wanted to create a synthetic around the current share price, they would buy a call and sell a put. Same expiration date, same strike. And the delta from selling the put is 0.38. The delta from buying the call is 0.63. You add those up together, you get 1.01. And that's approximately one delta. So that's going to get you the same exposure as 100 shares of strategy, and then you can just sell covered calls against this. And I listened to it a couple of times, and he said that this is a way of being able to make what looks like a 90% treasuries account give 100% exposure to the underlying and kind of get around that 25% rule. I couldn't tell if that's what he meant of like, okay, they're buying all of these options and giving the fund 100% exposure to strategy, or whether they were using these options to give them 100% exposure to the 25% exposure that they're allowed to have. I couldn't tell, even listening to it a couple of times, I couldn't tell what that really meant. So I'm probably gonna have to do a little bit of research. I think he said it was some kind of code 18F um, was providing the guidance. Maybe I'll check the chats and see if anybody actually knows that. But I can't imagine that it's giving them 100% exposure to the fund. And so the other weird thing though with MSTY is the price of MSTY follows the share price to a certain extent, but I feel like it's kind of like strategy following the Bitcoin pumps and corrections in that the buyers of MSTY and strategy kind of overlap. So people who are buying the dips in strategy have a similar philosophy and are buying the dips in MSTY. And this fund is not like an MSTU or an MSTX where they have to artificially create an equal move of strategy to their 1.5x lever or their 2x lever or whatever their lever they're promising. The MSTY price is the combined buying and selling activity of all of the investors in MSTY. So strategy could drop 10%, but maybe MSTY only drops 5%, or it could, it could go down 20%. It can do whatever the hell it wants to do independently. So that's another weird thing, is that the dividends that they're going to pay out are always going to be calculated off of MSTY's current price. But you're never really going to know what the price is going to be compared to how much premium they've collected over the last month. So that's a little bit like extra gambling, I guess. Um, But yeah, I'm starting to like the fund a little bit more after having watched that. Now, I'm still not gonna invest in it long term. Like, I'm gonna keep doing the challenge and see if I can pull ahead. I'm still like 22, 23 grand down compared to my MSTY position. But they even admitted to being a little bit, um, they've added some of these credit spreads in, and I had to listen to that one a couple of times, and I still didn't fully understand the way that he was describing some of those credit spreads, or excuse me, the way that they trade the credit spreads. But I think they even took a little bit of a bullish position in low IV environments. I'll have to double check because I only listen. I listened to the part about the return of capital initially, and then I listened to the whole thing once. And then it was funny to hear him actually say, not financial advice, but based on this low IV, not well, sorry, not low IV environment of MSTY, MSTR. And actually, when was this recorded? Okay, about a month ago. So about a month ago, he was saying that this was a relatively low IV environment for strategy, and that selling covered calls at those levels may not even be optimal. And this is my thinking, but he didn't say this part. But like, the whole ETF is about selling premium. So like, what the fuck is he gonna do? It's like when they were talking about Tony Rockahura in Pulp Fiction. He's like, the guy weighs 400 pounds, but he's Samoan. Like, what is he gonna do? Um, if that's what you are, you have to do your best selling premium in a low IV environment. They can't just fold their hands and be like, nah, we're not selling IV this time. But he gave the not financial advice disclaimer, but he's like, being low IV, this sounds like an even better environment to buy options. And I was like, holy shit, I can't believe he actually just said that. Um, and so I'm kind of stoked that I haven't been selling covered calls since the blood moon Ides of March prophecy, and just kind of writing this out to see if the long calls might actually outperform the theta decay, because I've got some pretty annoying theta decay in this account, particularly, right? 1,300 bucks a day. And so just in theta, like this single account is going down what, 6,500 bucks a week. And I should be able to collect, I don't know, twice that in premium easily. So it's not even that I'm losing the 6,500. I'm also not gaining like 13 grand a week. um in in positive theta decay. Um so my option selling proclivities is definitely it's definitely hard to do. It's like looking at this number every single day is kind of painful. But hearing that guy Jay Petrocelli, maybe not fuck up his name. Yeah, it's either Petrocelli or Petrocelli, depending on. I'm assuming that's Italian. Um, yeah, it like hearing him say, "Hey, this is kind of like an option buyer's market right now," made me feel a little bit better about watching this negative theta just dig my account into a little bit of a hole. Um, since this is my only source of income, the profits that I took last month are starting to dwindle. So my checking account is getting a little low. And unfortunately, we didn't get the Mandel candle yet. Um, so if I'm forced to sell some of these positions, to pay the mortgage, and man, health insurance is fucking brutal these days. I think we're paying like 1,500 a month for me, my wife, and my son. Um, Whereas before that was all part of my pay package with my company. Um, Probably will try crowd health in the next year or so, maybe. Especially once my son graduates. Uh, he won't be 26 for a while, so I have to wait and see how long he can be covered under our policy. But he's a young, healthy guy. He doesn't really go to the doctor much, so not sure if I should even be worried about him at all. Um, but yeah, so got bills to pay, and so if I end up having to sell some of these positions, some of them at a loss, right? Even my Septembers that I've had are at like tiny little loss. These Septembers would be kind of break even. But if I'm forced to sell any of these long positions at a loss to cover my bills, that would be annoying, especially when I could have sold some covered calls and not watched my account decay. So I'll get it another week to 3 weeks for some kind of magic to happen, I suppose. I'm losing hope that in the next 9 days, Bitcoin gets us back to S&P 500 numbers. Um, it would be just kind of like Murphy's Law that Q1 closes at the end of March, and then like the first week or two of April, we pump immediately back to a fucking 100K or something, right? So like just in time to not get us S&P 500 inclusion. But you know, if it doesn't, if it doesn't happen Q1, it happens Q2. If it doesn't happen Q2, it'll happen Q3. We can just keep kicking the can down the road. I'm not worried about it ever happening, but it's just a matter of, is it going to happen before I can't take it anymore and I just start selling covered calls again? Like, I really want to see 325, 350 before I break down and start selling covered calls again. And I'd really like to see it rocket up to 400 in a week. That would be fucking amazing. So if Bitcoin could just go to 100, that'd be great. If, do I need to sacrifice a couple of chickens or a goat? I mean, I sacrifice 4 eggs and a pound and a half of ribeye every day, but I don't know, does that count? All right. So that's my new opinion on MSTY. I'm It does make me a little bit more nervous about my challenge though. Um, I really need that pump to 325 or 350 in order to pass them up. If we continue to chop sideways for 6 months, I might be able to kinda catch them, but, it's kinda weird to imagine that they're able to pump out these kind of returns and only investing like 10 to 25% of their entire portfolio. That's hurting my brain a little bit. So, definitely got a lot more respect for MSTY than I had before watching that YouTube video, and I know we're supposed to, don't trust, verify, but nothing that they said in that video sounded outlandish. It all seemed very reasonable explanations of, the return of capital, and of course, he's gonna give himself a favorable explanation, right? He's not gonna be out there and be like, "Oh, yeah, return of capital, we're totally bending you guys over and screwing you." It did seem, kinda past the sniff test, kinda checks out a little bit. So, um, if I do end up actually beating them over the next year, I think it'll even be a bigger, achievement. I kind of felt like, "Oh, yeah." Um, none of their trades seemed terribly special. It wasn't like, they've got a trade desk of, like, 20, 25 people, I think that was it, or 50 people? However many people they've got a bunch of intelligent people. They've got access to probably AI and tons of fucking data, but nothing about any of their trades led me to believe that they were doing anything special, right? If you're an option seller, you, you can sell puts, you can sell covered calls, you can sell put credit spreads, and you can sell call credit spreads. There, there's really not a lot of other things that you can do. If you have some reason to believe that we've hit a local top, I think they're free to just buy a put, and I can't remember what kind of collar that's called, but if you're selling a covered call and then you buy a put, it protects you to the downside. So they could do some things. I haven't seen it. They did allude to them doing it in some of their funds, but I I I don't watch their daily trades, so I can't say if they've ever bought downside protection. I would kind of hate that. I can't say that I've never bought a put, but it's like 9.999% of the time, I don't like buying puts because I feel like I'm just buying insurance, and that kind of pisses me off. The idea of when I when I'm actually collecting a positive theta to buy a put and like I feel like that's just cutting into my theta profits. Um, not financial advice, but Josh made a bunch of money buying puts in IBIT in somewhere November, December-ish, maybe the January timeframe. So if you're skilled at it and you can do it, of course you should do anything that you can to make some profits, but that's not really my thing. Um, so, any of these complex, tricky spreads are just combinations of those four, the four basic options. And so you can just break them down to those four things individually. So there's nothing like I don't know. There's like no secret sauce that they can just tap into that the regular option buyer and seller can't do themselves, other than just being, you know, they've got some experience, they've got access to data, and they've got access to fucking billions of dollars in seed money. So that's nice. That helps. Um, but yeah, there's no so if I knew nothing, even if I thought that they were the perfect option selling machine, I still can't rationalize paying them a 1% management fee when, there's no real secret sauce to it other than just, um, I guess if you don't think that you're competent, then yeah, you should pay them to do it, right? If you're gonna do it and lose 5% of your returns screwing it up, yeah, then it makes sense to pay them 1% and not lose the difference between the 5 and the 1. That makes sense. Like, I've been binge watching, like, Daniel Negreanu and, all these poker players. I barely even know the fucking rules. Um, but I like any game, period. And some people they recognize the limitations of their own poker skill, and they actually just make money staking professional poker players. They're like, "Yeah, I'll pay your entry fee into this tournament," and then they get equity back, if they win something. So you could argue that paying, MSTY 1% management fee is really just staking them and recognizing that they might be a better trader than you. That's perfectly fine. Um, I'm not ready to throw in the towel yet, and I enjoy trading so much that, that would be kind of like paying someone to do something that I find enjoyable, so that's weird in and of itself. But anyway, let's check the chats and see what people had to say about this. Yeah, Emperor, let's go. You're the man. Let's see. At some point, do you think it's worth buying call debit spreads? Yeah, I've been buying them. And with this low IV environment, I guess I got to give my not financial advice disclaimer as well. But if it's a good idea to buy calls because IV is low and the price could go up if Bitcoin rallies, strategy rallies, price goes up, then buying a call debit spread like I have here. Now these got wrecked because I bought these 100 days ago when strategy's price was like, I don't know, 400 a share maybe. But even in that environment, and I I was kind of motivated to buy these when the price was going up. And I got this idea from Climb the Ladder's video of it was like when Delta lies. So I think that was how it goes. And the reason is because in a high IV environment, when strategy is setting all-time highs, the deltas were like jacked up way higher than they would be. Like right now, the delta on the 1080s for September is 0.08. Back then, the highest option in the chain, the deltas was like 0.2, zero point 0.3. You couldn't even find a 0.1 delta. It was ridiculous. And so he had a couple of points, and I didn't really fully understand his original point until later. But it was kind of like, okay, if you're going to make a directional bet in a high IV environment, then you might as well do a call debit spread, because if you're overpaying for the long call, at least you're getting overpaid for the short call. And I still overpaid for these because I paid like what, $800 each for these. But if I had, and let's see, they're down to worth like $100. But if I had bought these long calls only, they would be down like 95% or something stupid, like 90% instead of being down 75%. And then if by June we were sitting at a 950 price, then these would be winners. And you're capping your max loss at $800 a contract instead of just buying the call and like potentially being down $8,000 a contract. So yeah, if somebody's bullish and IV is low, yeah, it makes sense to buy calls and buy call debit spreads. That's a perfectly reasonable assumption, I think. What's up, MSTR Owl? What's up, Deck? 5x June 6 600. Oh, and then 27 of the July 1080s, 7 September 1080s, and 10 of the December 1080s. All right, let's fucking go. Um, yeah, I'm pretty nervous about my Junes, and I'm starting to get a little bit more nervous about my Julys. Not really worried about my Septembers and Decembers. What's up, dude face? Aziz, I sold weekly cash secured puts last week. It went quite good. You are not up into. So I decided to lay off of option selling in this account. Cash secured puts, return on capital, especially on, did you do weeklies? Yeah, is going to be the same. So let's go out to next week. I can sell cash secured put at the 302.50, put up $30,000 of collateral for the cash secured part. They're going to pay me $1,100. I can go and buy the shares for $30,400, and I can sell the covered call for, hey, look, $1,100. Same thing. Same capital that you have to put up. We're not talking about margin here. So you have to lay down the same amount of risk, because if strategy goes to zero, then your cash secured put is worth jack shit and your $30,000 will be gone. If you buy the 100 shares and the strategy goes to zero, your $30,000 is wiped out. You get to keep the 1,100 in premium with the cash secured put, and you get to keep the 1,100 in premium for your covered call. So when people talking about, how come you don't like cash secured puts, it's not that I don't like them. It's just they have the exact same returns with the exact same capital efficiency. And so I don't really look at them any different. So the put call parity is usually pretty good at the money. You could make an argument like maybe at 45 days to expiration. Let's just sell a put. Let's go 50 below the share price. I could sell, again, around 1,100. And let's go 50 above the share price and go to 355. So in that scenario, if you don't want to do weeklies where the put call parity is strong, it looks like so this is a little bit misleading as well, I think, because in this scenario, you're going to have to put up $30,400 to collect the mid price of about thought I had the mid price. Maybe let's just say $1,600. And then in this scenario, though, you're not actually putting up 30 in collateral. You're only putting up 25,000 in collateral. So I think that's probably going to work out to the same returns. For a second there, I thought it looked like going out to 45 days was an advantage to the covered call seller. But again, they're still kind of mirror images, because selling the weeklies at the money, the put call parity is very strong. But once you go out and you're starting to sell cash secured puts out of the money or versus selling covered calls out of the money, everything in options is kind of opposites. So your call away value on the covered call would be between 304 and 355. But with selling cash secured puts, you don't have call away value. You have like discounted entry price value. So if the price did go to 250 a share by May 2nd, then you'd get the opposite of a call away value benefit. You'd get the opportunity to buy the shares at a what, like almost a 25% discount? No, 20, yeah, 20%, 15, 20% discount. When I first started selling options in May 2020, I used to run the wheel. So I've sold a ton of cash secured puts. It's just that it just kind of doesn't matter. You can run the wheel, you can sell cash secured puts until you're assigned, you can turn around and sell covered calls until they're called away, and you can just keep running the wheel around and around and around. Um, but that profit is going to be basically the same as if you just go to straight step 2 of the wheel, buy 100 shares and sell covered calls against it. And then if it looks like they're gonna get called away, but you're still bullish, you can just pay to roll and keep your shares. I'm not a tax advisor, but it seems like if you held those shares for a year and then let them get called away, that you would be taxed on long-term capital gains instead of short-term capital gains. So that may be a reason for some people to just try to not let their shares get called away for at least 1 year if they're worried about the difference between short and long-term capital gains. I never really bothered to track whether I've held shares for a full year or not. Um, but it could be one way to optimize your tax burden, I suppose. Losing streaks, it's buying power reduction arbitrage. All right, so you made that comment at 10:54. I don't remember what the fuck I was talking about back then. Can ask Grok to help you interpret it, maybe. Yeah, I'm gonna do that. Okay, so losing streaks. They use call spreads, so the pump to the upside is still there. You have to check their daily trades to calculate the premium. Long term, even the tasty commission can drag you down. Yeah, exactly. And so, for I basically trade on Tasty Trade because I've gotten so much from their research that I just treat it like a tip. Um, it kind of works out okay when you're selling, if you're selling a covered call for $1,000 and you pay them $1, it's like 0.1% of my profits. Like, okay, that's fine. Um, if you've got a 5K account and you're trading frickin' CLSK and you're only getting, or let's just say doing a weekly, you're only getting $30. Well, now that dollar is 1/30th of your frickin' profits. So it's a hell of a lot more meaningful. Paying $1 when you're only making 30 versus paying $1 and you're getting paid 300 or 1,000 is a big difference. So a lot of people look down on Robinhood traders, but on a small account, or if you just don't want to pay these commissions, I think it's a no-brainer. So, Michael, good luck on your book sales, brother. Was really hesitant initially just because I like to do things myself so much, but the more I've come to understand it, the more interested I am. Yep. Let's see, each order they have better fills than you, and their fees are much less. Yeah, that's another good point. I wondered that myself. Like, do they get better like margin requirements? And I can't imagine that they're even using margin if they've got billions of dollars of freaking treasuries laying around. Um, yeah, they probably negotiate lower fees because they have so many. Like, yeah, you're putting in thousands of option contracts. Even Tasty Trade gives their like if you do a lot of 20, of course I have a 19 and a 21. But if you buy their options in or sell whatever in increments of 20, instead of charging you $20 for 20 contracts, I think they cap it at $10. But I think you have to make all of those in one shot. Like I started stacking these 20 Junes over time, so I probably did pay a dollar for each one. I didn't just pay $10 for 20 because I bought them, one today, one tomorrow, one next week, and they've dollar cost averages, up to 21 of these damn things. But, but yeah, I'm sure MSTY goes in and, it's just like Walmart with volume. They can just probably, negotiate better prices. Bitcoin Barber says crowd health is awesome. Yeah, I really wanted to do it, but, this is my son's last year in college, and so I can kinda argue that he's on his own next year, and I can go do my own thing. Let's see, just got that Jay Petrocelli video queued up. Yeah, check it out. Let's see, Josh is pretty sure they will get into SPY this year. Yeah, I mean, I think so too. It's just a matter of, it's gonna be disappointing, and all of the people thinking that we're gonna get in Q1, if we don't, like, is the price buoyed expecting it, and then there's gonna be some disappointment that we might not get it? There could be some painful repricing events if we don't get it in, early in the year. But if it does kick the can down the road and we get those, couple of Fed rate cuts and, they come up with a formal Bitcoin buying policy with the Bitcoin reserve, if like all of that kind of happens at the exact same time that they get S&P 500 late in the year, that could become very interesting. Let's see, Dudeface. It's much easier to sell my friends and coworkers to buy MSTY. It's a gateway drug for strategy in Bitcoin. They understand monthly dividend. That's another great point too, because what is it like? You have to appeal to what other people want, right? It's gonna be hard to explain the 25 hours of fucking sailor videos that you saw on Breedlove's channel and get them to grok that kind of crap. But if you tell them, "Hey, there's a dividend stock paying 10% a month," they'll be like, "What?" They just start salivating over that kind of stuff. Hold on a second. All right, my dog was whining, asking for permission to get on the bed. Let's see here. Boeing Hitmans, I would sacrifice 3 children for that. It will be back to 500 in 2 weeks. Fingers crossed. Thanks for the breakdown. Seems like there can be a place in a portfolio. I'm not skilled like you and Josh. Yeah, I think that's the basic argument, and it's low maintenance too. Like, if you're orange pilled, like the whole point is to just have more time, right? The fiat system is stealing your time. You have to run and you have to do your job, maybe that you don't like, and the only thing that we can kind of do is just try to convert that fiat and stack sats. But for what purpose? The whole purpose is that time is the only true precious resource in life. And if you can stack enough sats and get yourself to the point where you have, fuck you money, then you can just do whatever you want. And you can go to the fire calculator, the fire Bitcoin calculator, plug in how much Bitcoin you got, and you can just start spending it. And as long as it goes up faster, it goes up in value faster than you're spending it, and you can basically retire off of it. Um, and that's what MSTY seems like is the real offer. It's like, do I wanna go and, uh, like, I listen to hundreds, maybe 1,000 hours of option videos at 2x speed, right? Walking my dogs just for hours. They were probably like, "Why are we still walking?" And I'm just binging on these videos. Um, you can do that if you find it interesting, but for some people who don't find it interesting, then that's a waste of their life to try to learn how to do something that they don't wanna do. And at that point, paying them a 1% management fee seems like a bargain because if you get more time to listen to music instead of freaking options videos, or you get more time to do whatever the hell you wanna do, surf and get swole like Emperor Lightyear, paying that 1% is dirt cheap, probably. Sorry, what YouTube video did you watch? This one. Let's put it in the chat. Let's see, they get preferred portfolio rates as well on leverage. Not surprising. So you can't beat it. Pretty sure their broker has better margin for T-bills. Live on Saturday. What awesome. It's funny. I actually forgot it was Saturday. My wife had to work today, so it just seems like a regular day, right? Her fucking alarm goes off at 2:30 in the morning. Um, we were both, well, she's still a lab tech. I used to be a lab tech in the Navy and then as a civilian. So she's still doing that. I can't convince her to quit yet. Um, we'll see. But I actually forgot it was Saturday. I legit when I was looking at the even when I was looking at these options prices, I was like, wait a minute, why isn't there a March 21st expiration on here? So that's what being semi-retired will actually get you. Is it didn't occur to me that today is Saturday because now that I don't actually have to clock in and out, time is meaningless. John's story, just when I was about to look into MSTY return, I assume you mean return of capital question in my local coffee shop. Thanks for choosing such a timely topic. Yeah, I got psyched. Um, I think Jeff in our internal chat shared that link of that video, and then Emperor shared it with me as well. And was like, "Hey, did you see this?" And I just got really excited to make this video. Um, didn't occur to me that I was doing this on a freaking Saturday. Let's see. It's simple, better fills price and less fees. They've got T-bills yield. You're welcome, Boeing. Let's see. 1% fee is less than my opportunity cost of doing it myself. Yeah. Now, depending on, I used to watch Jocko Willink a lot. He's a former Navy SEAL. He's all got his whole leadership shtick and everything. I really liked a lot of what he was talking about, even though he's still very, he might be the ultimate America trad life kind of person, but he liked the idea of learning things at least once, just so that you have the skill. Like, I think he needed some wiring or something done in his house, and like he just learned how to do it. It's kind of a manly thing to do. You just learn how to do something, even if you have no intention of doing it. So like he did it once, and now that's a part of his tool. You know, that's a tool in his toolbox. And if he ever had to do the wiring, he could do it. So you learn how to do it, and then you just pay somebody else to pay somebody else to do it. But you know, learning valuable shit is a masculine thing to do. And then once you know how to do it, then you're like, "Nah, I really don't feel like changing the oil in my car. I'm driving a Jiffy Lube." Let's see. Tasty charged you what multiple of 1%? See, wasted time. Although once my portfolio is bigger, the 1% fee will hurt more. Yeah, that's something to think about. You know what I mean? Like, well, yeah, 1% is 1%. But yeah, if you had a holy shit, if you had $100 million account, you'd be paying them $1 million. Now, if they continue to churn out 10% profits and you're making 100% a year and your $100 million account went to 200 million and you had, it would be worth it to pay them that million. But yeah, it just does seem like it just gets kind of insane. But I'm sure that's all deductible anyway, right? Actually, don't know. Let's see, playing weekly covered calls and the cash secured puts at the same time for at the money, one at a time. Josh, my entire port is 100x December 1080s when moon. Will sell most if Ivy ramps up and move to shares. I don't know, man. Let's see, you got the Decembers. Like, I'm not worried, but yeah, I would be even as bullish as I am, I might be a little bit nervous about sitting on that kind of stack. Um, this might sound a little bit hypocritical coming from someone who literally has one ticker in their entire portfolio, but diversification of strategies is a real thing too. Like, I've got shares; those don't have an expiration date. I've got some in the money stuff that I sell covered calls against usually. I've got some of the, I've got some call debit spreads out here. That's a limited, um, it's a limited upside, but also limited downside play. Got my long calls. Um, I've got my 1080s that I'm going to roll out every 90 days. I got some Septembers. So there's no diversification of ticker, but there's diversification of strategies here. And even if my 1080s don't pay, even if I hold these 1,000 shares during the bear market and Bitcoin tanks, if it pumps to 200 and tanks back down to 100, and strategy goes to let's see, what is that? Almost 2 to 3x. So yeah, strategy goes to 12 to 1,500, and then back down to 600. Like, these shares are still worth something. There's no expiration date. I can just hodl these through the bear market, but I can't hodl my Decembers, right? I got to make a decision on these things. But if you're positioned to where you sleep good at night, then I'm definitely rooting for you. If you win, we all win. Emperor, seems like MSTY entry price right now is attractive if we are at a bottom. Yeah, I mean, uh, if Bitcoin's going up, then Bitcoin is a buy right now. Strategy's a buy. MSTY is a buy. Anything that's bullish on strategy, I am personally assuming is a buy right now. Snowy, what's up, man? Let's see. Nice to see you on a Saturday. How much do you think retail narratives drives how the market makers move the stocks? I'm starting to think that because retail mostly believes and is trading based on a Q4 2025 top, this is exactly why it won't happen. Starting to think that because retail is trading on another pump, right? So we're assuming that we get at least another pump, and that because everybody thinks it, we won't get it. Um, yeah, that's possible. I guess you kinda have to include any outcome as a potential, and then you have to decide what percent chance you think that outcome is, and then either, discount your trading philosophy based on that. Um, but there's nothing that sentiment can do. There's nothing that sentiment around strategy can do to alter Bitcoin. And I mean, everything that is a catalyst for Bitcoin, I don't think they can stop it. I mean, the interest rates have to come down in order for the US to be able to not hard default on the debt. We've got a Bitcoin strategic reserve. We've got corporate adoption, and that is going to keep multiplying. We've got nation state adoption, which will continue to multiply because that gamesmanship is it's just kind of required, right? Any major player that wants to replace the United States as the global power, superpower, or at least not become dwarfed by the United States, has to give some percent. Like they have to be making these calculations too. Like, what percent chance do they think Bitcoin survives and becomes dominant? They have to assign. Okay, guess I got signed out. They have to assign some probability to that as well. So they have to put some of their eggs in the Bitcoin basket. Every country on earth, it has to make some kind of allocation to this. And if you listen to Jeff Booth for, I don't know, more than 5 minutes, you're going to hear him talking about how the natural state of the world is deflation. And if AI is going to make the natural state of the world exponentially more deflationary, and the fiat system must not allow deflation to occur, they steal money through inflation, then they are going to have to print exponentially greater amounts of money in order to keep up the charade. Now, they probably can't keep it up forever, and I hope the system collapses with a whimper instead of a bang. I don't know if it's gonna be in 10 years or 50 years, but, they're the only way that they can keep up with the efficiency gains that AI is going to contribute to technology and the world. It's just gonna make everything infinitely cheaper. Um, like, abundance should be every single person on the planet's birthright, but, for the current system to keep doing what it's been doing for the last 1,000 years, um, they're going to have to print like a motherfucker. So, that just means number go up. So while there's a chance that we could get a reverse Uno played and like, maybe last November was the top and we're going to start the bear cycle. A lot of people think that the bear cycle won't continue and we're just going to get a super cycle, but you're absolutely right. You have to say, okay, do I think there's a 1% chance that the bull market is already over? Um, yeah, you got to put that into your valuation. And, I put that at like a really small percentage. I'm not terribly worried about it, but you're absolutely right to at least run those simulations in your head. Um, and that's why I'm an option seller to begin with, is because the stock market generally goes up and to the right, but when and how much is not promised. So, selling a covered call on a position or on a portion of your stack just kind of guarantees that if everyone is wrong about number go up, that you don't get as wrecked as everyone else. Now you're sacrificing missing out on some of the unlimited upside that everyone assuming it is going to happen, but everything in life is a trade-off. So Emperor Soleil, can't wait to hang with you one day. You're a cool dude for real. We'll get a lift in too. Damn right. I'm gonna hold you to that one. You're gonna have to spot me a couple of 100 pounds though. I am trying to fix my I'm switching over to a low bar squat. I'm reading Starting Strength by Mark Ripito, and I'm convinced that the low bar squat is probably superior to the high bar squat's probably okay too. Or is it the no, I'm sorry. I think in order, they go with low bar squat, front squat, and then I think the high bar rear squat is the one that they think is like the least attractive. But it's taking getting some used to having that bar positioned below my shoulder blades is kind of weird. Um, but yeah, we'll make it happen. I'd freaking love that. Michael Jocko was one of the main reasons I got deep into BJJ 9 years ago. Yeah, me too. I I actually let my membership lapse recently because I've got so many. Um, I jacked up both knees one at a time, so I ended up spending like 5 to 6 months rehabbing my knees. Um, just as a white belt last year, and then I thought, okay, well maybe I can, maybe my old man body can handle boxing class better. And now I've got like my shoulder tendons are fucking screaming at me. I think I've got like biceps tendonitis in both of my arms. So I let my membership lapse at my dojo. Well, it's not really a dojo. Maybe it is. Um, and so I'm just going to try to rehab. I'm going to try to get strong, rehab, and then maybe in June I'm going to go back and go sweat, go sweat out some rolls again. But I love it so much. I got to figure out a way that I can train without getting injured. Um, it's kind of rough. You're welcome, Snow. Let me think. Is there anything else that I wanted to go over? No, I think that's it. And we're all caught up on the chats. So appreciate everybody tuning in on a Saturday. 936 people. So that's pretty cool. And to think that I accidentally went live